Hello everyone, a very good morning. Welcome to Oliveboard. This is the JAIIB Foundation series for the May 2025 and we are discussing the RBWM paper. Today we'll be discussing the Unit 28 from Module E, which is the additional reading material on home loans, and this unit is Housing Finance and Tax Planning. So all of these videos are very important for your preparation. Make sure that you do not miss any of them. If you haven't seen the previous videos, they're there on the YouTube channel, so make sure that you watch them. Now, when we talk about the tax benefits in respect of housing finance, over the years, announcements have been made in the union budgets for the tax concessions, waivers, etc. And these are basically to encourage the housing and housing finance so as to counter the shortage of houses in India. So we'll be discussing the benefits available and the use of the benefits to reduce one's tax liability. So let us start. So in respect of loan that is taken or availed by the customer for the purchase, construction, repairs of a residential unit. We have discussed about the different types of loans, right? Home loans we have for the purchase of a plot as well, on which the construction will take place, a ready-made house, a flat, renovation, repairs, house decoration as well. So the borrower can avail benefit of payment of interest as well as repayment of the principal, right? So the interest and the principal, certain deductions can be made. So what are the home loan benefits? These are the tax deduction on the payment of home loan interest under section 24 of the Tax Act of the Income Tax Act of 1961, right? So we will write it IT Act of 1961 so that you remember. Then the tax deduction on the principal repayment of housing loan under section 80C of the Act, and the tax deduction for the first time buyer under section 80EE. RBI has also allowed housing loans for second house or second housing, but for the first time buyer also there are certain additional tax deductions. So it is very important that you remember these sections. Section 24 is for the deduction on loan interest, section 80C on the principal repayment, and section 80EE on the first time home buyer. Now let us discuss in detail these different sections. So first we have the section 24B. This is the section 24B of our Income Tax Act. It says that the interest on housing loan can be claimed as a deduction from the income from property, salary, business or profession, capital gains or any other source. But here what you need to remember is that a maximum limit has been set of rupees 2 lakhs under the section 24B of the Income Tax Act, right? So interest on the housing loan can be claimed as a deduction from the income on any of the property, salary, business, but a limit is up to rupees 2 lakhs. And then there are certain conditions that need to be fulfilled, that the loan has been taken on or after 1st of April 1999. Then the loan is for the purchase or construction of a residential property or refinance, right? Then the lender issues a certificate at the end of the financial year mentioning that there what is the interest and the principal that is paid during the year, and the interest payment of the home loan that is taken for a self occupied property as well. All right, so this is there. Now this is for the construction or the purchase of a new house. If let's say the loan is availed for the repair or renewal, then the amount of only 30,000 is allowed under the section 24B, right? Then the limit is 30,000. If it is self occupied, rented or deemed to be rented, there is no maximum limit for the tax deduction, and the tax benefit under section 24, all of these things are given, right? So there are certain conditions. Then we have the tax benefit on home loan principal repayment under section 80C, which is 1,50,000. The maximum tax deduction under section 80C is 1,50,000, and it can be availed for both self-occupied and let out properties that are given out on rent up to a maximum of rupees 1.5 lakh every year from the taxable income of the assessee on the principal repayment. So if the principal repayment has been made by the assessee, then this tax reduction of 1.5 lakh every year can be done. And it is also part of the various deductions allowed, like the investment in PPF account, the tax saving fixed deposit, the life insurance premium, NSC, Senior Citizen Savings Scheme, and so on. So it is inclusive of all of these options. So this is another very important point. The deduction limit of 1.5 lakh under section 80C is inclusive of all the other options. Then there are certain conditions. Only if the construction of property is complete and a completion certificate has been received. If it was under construction, then no deduction will be allowed. Also available when the property is self-occupied or let out. There's also reversal. If we talk about the reversal of tax benefit availed under section 80C. So if a house property for which the tax benefit was availed is sold within a period of 5 years. So if you sell your house property within a period of 5 years, then the tax benefit will not be eligible for claim in that financial year, right? So if it is sold within a period of 5 years from the end of the financial year in which the property has been received, then it will not be eligible for claim, right? Now, how can you compute the income for the self-occupied property? In the case of self-occupied property will be either nil if there is no interest on housing loan, or negative to the extent of interest on the housing loan. And the deduction cannot exceed rupees 2 lakhs or 30,000 if it is related to a renewal or it is a new property. Right? So this is how the computation of income from the self-occupied property can be done. This table is given. Then we have the reversal. We have already discussed the reversal of tax benefits if it is sold within a period of 5 years from the end of the financial year in which the property has been received in possession. Then benefit under 80C will not be eligible for claim, and the total amount of tax that has already been claimed in respect of the earlier year shall be deemed to be of income of such year in which the property was sold, and it will be liable to pay tax on that income. All right. So if you sell off your property within 5 years, then the reversal of the tax benefits under section 80C will be done. Then we have the third section, section 80EE, which is deduction available for the first time home buyers. The first time home buyers. So just like the deduction under section 24B, the section double E is also available to be to on the interest paid on the home loan by the taxpayer or the assessee, the interest that they pay. But it is only available to the first time home buyers. This is the most important point. The quantum of deduction is rupees 50,000 for the interest paid, and the deduction is available over and above the section 24 and section 80C. So it is exclusive over and above. So whether you have availed your deduction under section 24 of rupees 2 lakhs and in section 80C of rupees 1.5 lakhs, then over and above you will also have this deduction if you are a first time home buyer. Again, certain conditions. The deduction can be availed in the financial year from 1st April to 31st March. Value of the property should be less than rupees 50 lakh. Home loan should not exceed rupees 35 lakhs. These are certain conditions. Eligibility is also there. Then how can you compute the total income? The computation of the reasonable expected rent. What is the what all will be included in it. So the municipal value of the property, fair rent of the property, and the standard rent as well. Then how can we compute the actual rent of the property? These topics are important. So make sure that you study these topics in detail. And to make it easy, JAIIB selection batch for the May-June 2025, which is the all-in-one course. You'll get live classes of all the papers, the mock tests, full length, sectional, case study, and numerical. The classes will be in the non-banking hours where you'll get complete basics to advanced level prep. And you can also use the code VDAY to avail 49% off on your subscription. Also, there's a mega webinar on 26th February 2025 at 8 p.m., in which you will get the idea as to how you can crack JIB in your first attempt. So you'll get module-wise syllabus breakdown, step-by-step preparation strategy, insider strategy from topper, best study resources, time management, question and answer session, and it will also be attended by Vineet Kumar Sharma, who is the assistant manager at SBI. So register now for the webinar, attend the webinar, and assure your preparation. That is all for today. I will see you again tomorrow with the next unit. You can download the PDF from the description link, which is given in the description box. And make sure that you like the video, share the video, and subscribe to the channel. So thank you so much, and all the best.